Hey everyone, this is your old buddy General Romulus. That's right, with Backpack Trader, and stocks continue to cause problems for a lot of people out there. You know, I heard this one a long time ago. They say it's a correction. Look at that, stock's going down. It's a correction when your neighbor loses money, but it's a bear market when you lose money. Oh, pretty brutal, huh? How about this one before we get into the analysis? How is a stock market crash worse than a divorce? That's right, how is a stock market crash worse than a divorce? Well, in both, you lose half your money, but your spouse is still around. All right, this is Romulus. Look at the market action. For quite some time, you can go back and look at every video I posted since joining Backpack Trader over the past month. Every single one of them said the same exact thing. Well, among other things, but one of the messages was consistent all the way through, said the same exact thing on all of the videos. You can go ahead and I encourage you to look at all of them, actually, the ones with Romulus on them. I said that the major stock market indexes and most of the sectors would be revisiting those late February, early March, mid-March lows at some time between then, which was over here, and the end of September. How about that, though? We hit it for some of the indexes already. The small cap Russell 2000, bada bing, there you are. S&P 600 small cap, bam, baby, there you are. NASDAQ, whoops, they did it again, and there you go. That's right. Many of the major indexes, the Dow and the S&P, not quite yet. They're still a bit above. But many of the major indexes have already come down and tagged those late February, early March lows, just like old General Romulus said that they would. And how did I know that? Let's get into it. Let's pass this video around, everybody, shall we? Let's share it to everyone. And as you're sharing it, encourage them to share it and encourage them to share it. Go ahead and share it with all your different social media sites, because I am about to show you one of the most magical pieces you can ever uncover in the stock market. That's right. It's as if Merlin himself has appeared from the round table to give you one of his greatest magic tricks of all time. And are you ready? Are you ready for this? Before we go into that, this Wednesday at noon, everybody, myself and my coworker, Troy Noonan from Backpack Trader, we are hosting a question and answer session. That's right, question and answer session. And you can ask me if I have any other magic tricks up my old Merlin sleeve, and perhaps I do. However, for this Wednesday, it is at noon Eastern, hosting a free webinar, free question and answer session about how we do some of the things that we do. We'd be more than happy to have you on board. All you have to do is click that link right below the video, right there. It says it, Wednesday, April 27th, noon Eastern, a very casual and relaxed question and answer session. We would love to have you. We only have a few seats left, however. TJ just informed me a few hours ago that we're closing in on 100 participants. And so if you click it now, we can still get you in. But it's just something we don't want. Like I said, we want to keep it casual. We want to keep it low key. We don't want 400, 500, 600 people in there. So go ahead and click the link below. Get your seat ready. Join us. We'll be very excited to have you there. So let me show you how I was able to figure this out, that the markets had a high probability outcome of revisiting those late February, early March lows at some point between then and the end of September. Although in some of these indexes, it happened a lot sooner. And that's just how it goes sometimes when you're dealing with a bear market. All right, first, if you're using TradingView, and I highly encourage that you do, they have a free version of this package, very, very highly equipped and capable of doing what most traders need it to do. So just download the TradingView app there, and it'll give you most of what you need. Hit the word indicator, then you see advanced decline line. Click on that, come on over. The advanced decline line down here, by the way, is a cumulative run of all the stocks inside the New York Stock Exchange, which is this index right here, NYA. The cumulative run of all the stocks in the New York Stock Exchange, whether they are advancing or declining on a given day, it adds or subtracts them, and then adds or subtracts them from the running line. Okay, so one of the more reliable stock market indicators of all time, dating back, well, several decades, if not even longer, is the advanced decline line. Why? Because it tends to show you what is going to be happening inside of the exchange, inside of the stock markets, prior to what goes on in the markets themselves. So it's called a leading indicator. The drawback of it is it's a bit of a blunt instrument. The timing of it can be a bit rough. As I said, I expected the major indexes and the sectors to drop below those late February, early March lows by the end of September. In some cases, it happened a lot sooner. Let's go to another example. Here's the communications sector. That bashed through these lows back here just a couple of days ago. Didn't wait till the end of September. And the Russell 2000 small cap stocks, they didn't wait either. They're doing it right now as we speak. I mean, look at that. As we speak, it's happening. And like I said, go back and look at all the videos I've posted since the middle of March. You can see in every single one of them, I said that the indexes and the sectors would revisit those late February, early March lows, and high probability that over several months down the road, they would come down through them. But that's a bridge that we can cross together on a different day. Let's go back to the advanced decline line. As I mentioned, way back, the advanced decline line peaked in the dot-com mania prior to the exchanges running out of steam and reaching their highest level. What's happening here? Well, what's happening is that there are always a fixed number of stocks in any given exchange. For example, in the S&P 500, there are only 500 stocks. Some days, some go up. Some days, some go down. Now, with the advanced decline line right here, you could see that the prices of the S&P 500 are going a little bit higher over several weeks into the all-time high, and that was back on January 4th. But the advanced decline line stopped moving higher on November 8th. Again, prices went higher, but the advanced decline line was no longer advancing. What does that mean? It means that as the price of the index is climbing, advancing, there are fewer stocks inside of the indexes that are participating in the advance. Fewer and fewer as time went on, as a matter of fact. You could see quite a stark difference between the January 4th high and how much lower the advanced decline line was. This is a common occurrence, everybody. Very common occurrence. It means, again, that the index is going higher, but it's being supported by fewer and fewer stocks. So unlike in the Three Little Pig adventure, where they ended up in the brick house, this is going the other way. When price is at a new high and the 80 line is at a new high, you are in the brick house. But as price is going higher, the 80 line is no longer matching that ascent. You are going down. Okay? You're going into the wood house and then into the straw house. And it's only a matter of time before your house bloweth over. And that has been going on all year long. The bear market winds have been blowing throughout the entire market, and the pigs are being swept right along away with the wind. So after the market peak, we run into another curious development that was also courtesy of the old-fashioned advanced decline line. That's right. Okay, S&P comes up again, puts in these two highs right here. That was an obvious area of resistance because not only couldn't go any higher, but it turned back around. And by the way, that was turned back by that orange line, which is the 50-day average, an average of the previous 50 days of price. So the market comes up here, turns back around, then heads back to new correction lows. But a rebound rally develops in here. Okay, and this is the curious event. Prices come up above these two areas. Okay, on a closing basis here, on the following day, they stay above a little bit. But the old-fashioned advanced decline line, look at this, everybody, can't get above those twin little resistance areas right here in early February. You see what happened? Look at that. Again, look at this. Take a close look at this. I mean, really pay attention to this, everybody. This could be the difference for the rest of your life between consistently making money and just floundering around, which is the response I get from so many people that are not a part of Club Romulus around the world. Okay, again, price goes up to the same area. It's turned back. That's demonstrated here. Price goes above, but look at the 80 line. It can't surpass this area. And again, back in November 8th, okay, price and 80 line are peaking together. Price goes higher by January 4th. The 80 line does not surpass the November 8th high. Then, things get curiouser and curiouser because look at this. We have a cluster of price lows back from late February, early March. This is critically important to the stock market, by the way, these cluster lows in here. Critically important. So the market pulls back. 80 line, though, doesn't just match the low points like it did, like the price did. It crushes to a new low. Look at that. Just blast down to a new low. Doesn't matter what kind of rally took place after that. This is how your old buddy Romulus knew. Right there. Okay? So again, share this video around. Share it with everyone. Share it on all your social media sites. Pass it, pass it, pass it, and pass it again. There's a lot that I know about the markets. I've been doing this for over 27 years. My partner, TJ at Backpack Trader, he's been doing this for 29 years. So combined, we're closing in on 6 decades of experience. There's no one else out there that's doing YouTube work that has the level of experience that we have. If you know of anybody, bring their names to us. Okay? There isn't. I started my career at 67 Wall Street in 1994. You can't even start a career on Wall Street anymore like I did. There's no more investment banks and broker-dealers left. They're all gone. Now, entire Wall Street is covered with shops, yoga places, bars, clubs, condos, and apartments. Okay? There's even a Tiffany's there right now. That wasn't there when I started in 94. Unbelievable. All right. So, in addition to having all this experience, I've had the good fortune of being taught by some of the greatest traders and technical analysts of all time. The people that taught me, well, many of them learned from the people that invented a lot of this stuff in the 20s and the 30s. So I like to say that I'm kind of the great-grandson of a lot of the stuff that was developed during the golden age of technical analysis, which I consider to be the 1930s. Anyway, that's a little bit of a sidetrack. Look, I know those of you who are not a part of the Romulus Legion, you're not a Centurion. I know you've lost a lot of money so far in 2022. I know you lost a lot of money probably from the middle of 2021 on for the last 9 months. Maybe some of you even crushingly so. I've heard from some of you people out there that are just getting just slammed. I mean, I know some of these internet guys are trying to tell you to keep buying stocks like this when they were buying at $25 a share, and it just keeps going lower and lower and lower. I mean, you got to wonder, at some point, the banker's going to call on their loans, and you're not going to hear from those people anymore. Okay? Then you're not going to hear from these people anymore. I feel for the amount of money that you've lost. I truly do. Come to our webinar, click that link below, join us this Wednesday at noon. Casual, low-key affair. Troy and I will be answering your questions about how we do some of the things that we do and have been doing for many, many years. We would love to have you. So, again, a little primer on how valuable the advanced decline line can be in helping us figure out what the heck this market's up to. This is your old buddy Romulus. I am heading back to ancient Rome, everybody. There is a lot going on, as I keep mentioning. It's springtime. It's campaign season. That's right. The farms are getting planted. There's a lot of work to be done. And I'm all about it. Look forward to seeing everybody again tomorrow. That's all for now.